You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, how are you? Welcome to Masters in Trading Live. My name is Jonathan Rose and I get on here every day the market's open. We get on at 11 o'clock Eastern time, go over the market, share some thoughts, and once in a while we'll even share our trade of the day. I'm a big believer, guys, the creative trader wins. We want to look at things different than everybody else. We don't want to just focus on the big seven, the most liquid names. We want to look off the beaten path where people aren't necessarily looking. So we're on YouTube, guys. We're live. Hey, how's everybody doing? If you could say hello in the chat, I'm going to try to get the chat a little bit more going because we get questions after the fact. I want to get some questions while we're on. So I was talking with who we got on here, Dale and Greg. Hey, everyone. So we are on YouTube every morning, 11 o'clock a.m. Eastern time. And as I go through this presentation, I'll keep up the questions too. If you have any questions, I'll try to make sure that I get to all of your questions. Bunch of topics today. We're going to talk about VIX term structure, something we talk about often. Yesterday, the front end of the VIX term structure was strong, finally spiked. I want to talk about divergences. We had a wing dinger of a trade, 500% plus in our Discord. And then finally, we're going to talk about short-term options. Let's go to the slide deck. Let's get to it. All right, let me set things up a little bit. And I want to talk about this first. In front of you, this is what's called VIX term structure. And current VIX curve, the VIX is 30 days. That's acting weird. So the VIX is a 30-day measure of volatility. What we want to look at is not just the 30-day measure. We want to look at the 1 day, the 9-day. This is 23, 30, 37, 90, 180. So we were looking at this, and this is October 7th. Today is October 24th. So what are we? 7 days past this October 17th date. Now, VIX 1 day right now is 1012. Okay, a little bit lower. The VIX 9 day right now is 1711. The VIN is 1943. I'm going to cross it out because it's kind of right here. The VIX is 1936 right here. The VIF is 1896 down here. The 90-day is the same, and the 1 year is higher. The 1 year is 2163. So look at this now. Everything is the same except the 9-day is higher and the 37-day is a little bit lower. How you can look at that is there's more risk in the market right now. But also, October 17th was about 25 days from the election. But now, this 9-day is closer and closer to the election. So the 9-day is getting closer and closer to what these were. But there's also more risk in the market right now. So here's the QQQs. And if we look from October 17th, just so you can see like the behavior of this stuff, October 17th is right here, right? what's going on right now? There's more risk priced into the market. There's more risk priced into the market, and that's why that 9-day is considerably higher. Market sells off. Market rebounded a little bit. But overall, there's more risk in the market. Now, there's not a ton of risk in the market. This VIX 1-day spiked yesterday. That was really weird to me. That's when the market started falling. But today, it's right back offered. So for the market to go down, I would use that 1722 of the VIX 9D. That VIX 9D, if it continues to go higher, the market will trade lower. Hey, Rick, what's up? Hey, Marty. Hey, Brian. Hey, buddy. Yeah, these ODT trades are fun. Really cool. But that's why, guys, follow that VIX term structure. Follow it really, really closely. At Masters in Trading, we have 4 programs. Okay, the major is advanced notice is our biggest one. Earnings, every single earnings season. We trade earnings the exact same way. We have a divergence program, and then we have a blockchain program. A divergence program talks about spreads, talks about pair trades. And I want to talk about the divergence program because we had our best divergence trade of 2024 yesterday. I want to show you exactly how that trade works. Here was the trade that we shared, and the trade was shared October 8th. Today's October 24th. The trade was to get long LRN, an educator, and also to get short a Chinese ADR educator, buying November 85 calls and also buying the 70 puts. So bearish from 70, bullish from 85. LRN, and this is a good lesson. Here, I'm actually excited about this lesson. Watch this. 10-8 was right here. Earnings caused this big move. Going into earnings, LRN traded from 75 down to 62.5. Really, really fast. We were long. It was not fun. What you need to learn is this move before earnings is absolute, I'm going to curse right now, so if you don't like curse words, please mute, is absolute bullshit. This move right here is absolute BS. Going into earnings, the stock plummets. It releases earnings and the stock rallies, and it seems like a really good rally, but all it did is just get right back to this. Isn't that really much of a rally? Or is this just a bunch of hogwash? If you're long a name going into earnings and that name gets crushed going into earnings, that doesn't mean bupkis. Okay? If you like your trade, get into your trade at cheaper levels. Movement into earnings is BS. LRN, and our other name was EDU. So if I take these away just to clean this up a little bit, the original trade when it was shared was 1008, which is right here, and 1008, which is right here. Now, because this is a divergence trade, it's one trade. All of this together, when you're doing these, you have to treat them as one trade. You can't treat them as 2 trades. It's a sucker's play. But when we get in, we were long here. So we were losing money on this one, but we were making money on this one. But still, the play is to hold, and then finally, EDU stays offered, and LRN just gets a tremendous bid right after earnings. So don't get suckered in to thinking the move before the earnings is what's going to happen after earnings. I've seen it so many times. The move before the earnings is nonsense. Oftentimes it's people rushing out of their positions because they're a bunch of pikers. I love that word. Pikers is just somebody who doesn't like risk. Always like to celebrate the community. Bill here was able to get out of EDU for 880, just like us. I got out at 870. And LRN, he was able to get out at 590. So he did well better than we did in the portfolio. Fat Booty here bought both for 1715 and then got out for 3,310. And this was the really good trade. Brian got 860 on EDU. Carmine, I don't know if Carmine had EDU. Carmine, if you're on the chat, did you have EDU or did you just go with LRN? Because what Carmine did was super, super cool. And I'm just going to go back here because what Carmine did, and again, we are buying options. So when you buy options, you get in, you have $400 of risk. That was the original trade. Well, when it goes offered, this move is BS because we have earnings. I'm not saying earnings were necessarily going to be bullish, but I don't believe this nonsense going into earnings. What Carmine did was stuck with the trade. Bought for 4, buys again right there, and that's what allows. So tranched means tranche in French means pieces. We get in and tranche in 3 times. So your first trade, your second trade, your third trade. So your first trade, 14%, I tranched in and I stuck with the trade because I'm confident I have a reason for being in the trade, and that allowed you to grab that 512%. Wahoo. Glockenspiel. There you go. How fun. What do we got next? That was the divergence trader. VIX 9-day, I showed you this chart last week, and I wanted to just revisit it. This is the difference between the VIX 9-day and the VIX 30-day. Last week, it was the highest that it's traded at in quite some time. Now that we get closer and closer and closer to the election, we're getting closer to those big VIX numbers in the 30-day, 23-day, and 37-day. So the relative relationship is trading lower. QQQ. I just took a little screenshot of QQQs with 1 day until expiration. I don't really love any trades right here. The market is pricing in the QQQs to move. I don't really expect that kind of movement. Last trade in the QQQs is 490. The range of the QQQs has been like stuck in the mud between 485, I guess, and 497 or something like that. So there's premium down here. I don't love it. I don't like buying any of these. I don't like selling any of these. I don't expect us to have that much movement. There still is premium priced in. I just don't love any of the short-term options. I thought I might, but I don't. I want to jump on live. Hopefully that makes sense. We look at the VIX term structure in our Discord all the time. I tell the guys if they have a lot of risk on, they really want to death stare that VIX 9D because that's going to give them really good information about the risk in the market. Next, what we're going to do with our all access, I got a cool earnings trade for you guys. For everybody else, I'll see you live tomorrow, 11 a.m. Eastern time. Thanks so much for watching, guys.